So are you going to have to pay taxes on your Social Security income? Like a lot of other people, you'll be surprised to find out. Give me just a second. So I've been working in the financial services industry for over 25 years now. And one of the things that is really surprising time and time again, surprising to me and surprising to people that are retired or very close to it, is they've put all of this money into Social Security. They have this expectation, as they should, that they're going to get income from Social Security. So you put the money in, now they're sending it back to you, and then you find out you're getting taxed on it. So it makes sense when you're working, you get taxed on your income. You have an employer, you do your job. I mean, understand how taxes work, but how come they're taxing us on the money that we've already put back into retirement? Then it comes to us and we wind up getting taxed on it. So here's the key, and it's very, very important when it comes to income in retirement. If you're retired, you potentially have several sources of retirement. One of those sources would be your investment accounts. Might be an IRA, 401k, might be a Roth account, might be a joint account, individual account, trust account. Depending on where that money's at, it's taxed differently. When it comes to income from Social Security, they're going to take a look at your overall income and then calculate how much tax they're going to tax you on that Social Security. Keep this in mind. Social Security for most people that we work with is not tax-free. If your income married filing jointly is between $32,000, and I'm talking 2023 here, 2024, but if that is $32,000 to $44,000, if your joint income is that, and I would argue that for most people in retirement, that's not a ton. Your income is probably higher than that, but in that tax bracket, 50% of your Social Security income is going to become taxable, meaning if you were making $40,000 a year jointly from Social Security, they're going to take $20,000 of that and tax it. If you're over that $44,000 married filing jointly, then 85% of that Social Security income is going to become taxable. That is important. Not everybody realizes their Social Security is going to be taxed. For, I think, most people, it will be, depending on what your income is. But this is why income planning, tax planning, financial planning is crucial, particularly when you're retired or very close to it. For most of the individuals that we talk to, maybe they're not extremely aware of how Social Security is going to be taxed, but what they are concerned about is making this transition from working into retirement. You're literally going from a point of, you know where your money is coming from, you know how your money is taxed, you know where your insurance is coming from, you know basically all those bits and pieces are put together for you, and then you make this transition into retirement and you're supposed to figure out Social Security, you're supposed to figure out your investments for yourself, you're supposed to figure out taxes in retirement, you're supposed to figure out which account do I pull it out of my IRA? Do I pull it out of my Roth account? Do I pull it out of my individual account? Investment planning is very important. Performance is important. You want the highest rate of return you can get, net of whatever fee you're paying, and you want the lowest risk. But at the same time, you want to be responsible when it comes to income. You want to be responsible when it comes to taxes. You want to know where to pull money out of. So a truly comprehensive financial plan is not just going to be investment management. It's going to incorporate income planning and tax planning. Thank you for watching. Go to guardingyournestegg.com for your free and objective personal financial plan.